The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 10th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance it's going to be tossed to us. I apologize, folks. I am multitasking. I'm trying to keep my system up here. I am trying to keep my system up. I tried to, as we went in between the break of the 11 a.m. update and the start of this show, what I was trying to do is pull up a chart for the S&P 500. I know it shouldn't be too hard to do, but I was going to go back and for us and explore the bear markets of the past and try to understand during those bear markets, did we, not that, we had moves like yesterday, big gigantic moves like yesterday, followed by a further sellout, but the question was along the way, did we actually form bottom patterns? Because that's what we actually did here yesterday in most of the cash indices and all the equity future contracts. My system is not cooperating, so I tried to shut things down, and even that hasn't worked just exactly as it was supposed to. So I'm going to try to do that again. That means I'm basically without charts. Even though you're looking at something on your screen out there, we're going to go ahead and shut this down. Now, I had a number of things that was close that program. So I'm going to start it back up. So we're just going to have a little bit of a slower move. Now, because everything is shut down, I should be able to, once I get this thing back up and running, I should be able to actually just go ahead and open up a chart for the S&P 500. Let me put my password in. And because I have much fewer windows open, so mood. Oh my goodness! Oh, passwords are case sensitive. In case you didn't know that, apparently I didn't know that. So you just need to keep the caps lock key off when I'm typing in my symbol. So Bill, you're looking for mood music. You don't want to listen to me speak. That's okay. So we'll get this up here momentarily, and so my apology for the slow start to the show. I shouldn't have done it. But I just had to, because I knew that the question that each of us have, quite frankly, this question that I have, and I don't know the answer to it, but we're going to find out. Now, this here is going to have to populate, so this is going to take a moment. Then I'm going to go ahead and try and open up a screen. As long as I've screwed it up this far, the opening of the show, we might as well kind of carry through and see if we can solve that issue. By the way, the GDX is up on my screen right now as the system powers up. The GDX at 11 a.m. completed a TD9 count top. That's not what it shows on my screen here, because it's really trying to still get activated. But you'll see here momentarily that you will see a TD9 count top that formed out here at 11 a.m. So what this tells us here, for those folks that are along the mining sector, what you're going to want to watch is, at least on a 30-minute basis, you're going to want to watch the high, which is 47.10. The price closes above that, tells you about a strong upward momentum move to the upside. Do you see my charts? I'm praying you do. Yeah, I think you guys can see the charts, so no problem there. And at the same time that GDX is doing that, it's running into a daily profile resistance. So it's testing that area as well, 46.94. So those are going to certainly be areas for you to want to pay attention to out there. Now, should we try this? I think we should try this, right? Don't try this at your home, but we're going to try it at Stevie's home out here momentarily. So if this doesn't work, it's going to blow my mind. And so now we're going to go ahead. I'm going to try to get a new chart here started. And if you give me a moment, that'll get up on our screen here in a moment. And we're going to go take a look at the S&P 500. All right, let's choose the S&P 500 for our analysis as to trying to understand index. And now I'm going to put in about 15,000 days worth of information. So that's going to take just a moment. We're going to take a look at we're going to start at least with the daily chart out there. So here we've got, and we don't want our profiles on there because we're going to take a look at the cash indice. So momentarily, now there's actually a chart that's trying to form on the other side of on one of my other screens. There, good, it's up. And so momentarily, after it's done installing all the TD9 counts and breakout levels and things of that sort, bullish, bearish, reversal candles, as soon as that's done on this other screen, I should be able to move it over. And then we can go ahead and take a look at it. Now, I could sing. I'm told I have a good radio voice. Now, what I don't know is, does that translate into a good singing voice out there? I don't know the answer to that question. I'm not sure that I want to explore that with each of you. We can also talk about the Masters out there. That's starting today. So what a great tournament. So I know the number of golfers that are inside the Tiger's Den. Everybody looking forward to that. Last I checked, we had Zach Johnson that was Lord, what's going on here? Well, I can't. There we go. Tell jokes. Yeah. No, Stevie's not in the joke-telling business out there. I love jokes, and I love people who have that ability to retain all those jokes that they've heard over the years out there. Man, this is not working, and I don't know the reason why. It really should have populated 15,000 bars. Ordinarily, shouldn't be that much of a issue out there. Good Lord, we got 2 minutes. We're just going to simply wait this out. So what we want to try to do, or what I'd like to try to do, assuming that this screen here populates as we move into a break in about a minute and a half or so, then we'll go ahead and continue that task. If I'm unable to do that, we're just going to kind of go back to the regular show format. And what I will do is at some point in time, it probably won't be until later this evening, is try to go back and take a look at that, because we understand, have any of these bear markets on the way down, have they formed those daily and weekly Gartley buy patterns? Now, the weekly's not yet over, but certainly on a daily basis, we got Gartley buy patterns. Here we go. So now we can pull that chart over. All right, so we've got this. And let's try to go back into the 2007, right? So we're not interested in the flash crash or the 2020 COVID crash or anything like that. Let's go back to a real bear market out here. And let's go back to the 2007. We're in 2007 right now. So this is a daily time frame. And so the 2007 bear market starts October 11th, 2007 out there. And so if we take a look at where there A to B equals CD patterns to the downside, let's take a look at that. So here's our first A to B pattern. And I'll just simply move that over to the C point out there. And we can see that along the way, there was a Gartley buy pattern that formed on November 13th, 2007. What else do we know about this pattern? What we know about this pattern is price rallied right up into that red oscillator and change line. Price turned down, made a larger by the D point pattern. And when we come back from this break, we'll take a look at that. Steve Rhodes with TFNN.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're exploring the S&P 500. We're going back to 2007. Yesterday was a confirmation of a Gartley buy pattern, a buy the D point bottom pattern. And so we're going back to take a look at 2007, the S&P 500, and take a look at its patterns as it moved to a final bottom back in March of 2000 and March of 2009 out there. So we've got the March of 2008. No, it's March of 2009. Okay. So we can see along the way many different bottoming patterns, right? So the first A to B equals CD pattern, that completed on November the 13th. And what we know is that price rallied up into its oscillator and change line, which was red. That's a bearish condition if it's unable to close above that. And it continued to move lower. Now, when it moved lower and it formed its next bottom out here, that next bottom actually negated a second buy the D point pattern that had formed with a bull sash candle, I should say, on November the 23rd out there, but was negated the very next day. What was also going on at that same time is price was testing a prior swing point, a bullish hammer candle from back on August the 16th out there. Price, in essence, tested and rejected it. It closed inside that on day one and then closed right back above it the following day. That's the only bottom that I see at that stage. What did that lead to? That led to I believe it led to a Gartley sell pattern out here. So there's your A to B level. Let's see, did we actually make the C to D point? And we really didn't. So what really wasn't even a Gartley buy sell pattern at that tie out here that formed on December the 11th. What does price then do? It forms a larger A to B equals CD pattern. That gets confirmed with this bullish engulfing candle, and then we see a rally. Now, why did that rally stop where it did? I don't have a pattern out here, at least on a daily time frame. Now, what I don't have turned on is all of the TD9 count breakout or breakdown levels out there. That might be of assistance. We had a nice bottom that formed out here back in March of 2008. That was a Rhodes Momentum Indicator bottom. And that by the D point, by the way, back in January of 2008, that level held. It was tested a couple different times, but that level held. And that led to a rather nice rally. Now, that rally, when it took off, that did form a Gartley sell pattern. I'm not going to go ahead and draw it in out here, but that did form a Gartley sell pattern out there. So, look, I think we've really answered the question, at least at this moment in time. For this purpose, I would love to put this on the weekly time frame. I'm a little bit, I won't do that until we go to a breakout here, and then just see on the weekly basis whether or not. So, first of all, let me do this one thing before I move on. Out there and that is, so what did yesterday's action? Where are we at with regard to yesterday's action? So remember, we've got our first buy the D point pattern that forms with that bullish engulfing candle. Support, by the way, is going to be the low of the prior day that the candle actually engulfed. So the actual support level on the cash indice is down at 49.10. Now, price did close above that red oscillator and change line, different than what we took a look at on that first A to B equals CD pattern that completed back in 2007. But we're back below that red oscillator and change line right now. So that says today what's really important to be watching, I believe, is that level, which right now is at about the 53.14. You're going to need, if price rallies, maybe it's 53.17 or something along those lines out there. So that's what we have. Take a look at the S&P, and as best as I could do, I probably should have done all the work at a time. Then I could have had my thoughts much clearer than that. So let's at least get back to what's going on inside the markets as we speak right now. So you got the let's go actually to our first request out here. Although, gosh darn, things that really got screwed up. Okay, the first request coming in from Brent in Martinez, California. Brent wants to take a look at ticker symbol BGS. So I'm just going to stay on this set of charts here that gives us daily, weekly, monthly, and then we've got a 30-minute time frame chart out here. And what Brent is looking for is exploring for a bottom. So when we take a look at the daily time frame, Brent, as you probably know, we're in bar number 6 of a TD9 count. I'm going to go ahead and expand this chart out for you. And price is moving into a TD9 count bottom that formed out here back on February the 25th. Now, the volume on that candle session was 3 million shares. Yesterday, we pulled back and tested and rejected it with 3.8 million shares. So because we tested and rejected the top of a swing point, that said that we would be back down there to retest it. Well, we're retesting it now. In just short of 2 hours of trading with regard to BGS, we've done 645,000 shares. So that's about a 1.8 million day going against a 2.9 million day. But what you need to see here is you need to see this level get rejected. The level means a close above 583 at day's end. We're at 577. What happens if we close inside that with lighter volume? We don't know. But likely, price might go test that low. If it was with volume, like yesterday as an example, then we would reach the conclusion that that low is going to get tested, maybe even taken out, and that low being 545. So on the daily time frame, do I have any kind of bottom signal? The answer is no. Do we have an A to B equals CD pattern? We most certainly do. So you can see the hammer candle that formed back on March 28th. That was taken out. Was it taken out with volume? I don't know the answer to that question. But the A to B equals CD pattern gets us back to that TD9 count bottom back on February 10th. And I think that is likely where price is headed to. Now, the volume on that hammer candle on March 28th was 2.5 million shares. We know it was passed at least yesterday with 3.8 million shares out there. So there's a confirmed A to B equals CD pattern to the downside. That suggests that we do go explore on a daily time frame, that swing point from back on February the 10th. If we take a look at the weekly time frame chart out here, weekly time frame chart had a Rhodes momentum indicator signal, but never received a bullish reversal candle. Instead, Brent, what price did was it rallied up and ran right up into resistance, profile resistance at 792, and has since backed off. Now, on a weekly basis, it's Thursday. The volume of that weekly candle is 8.4 million shares. So far for the week, what we've done is 8.8 million shares. So on a weekly basis, we're moving to that swing point with volume. So what does that say? That says that low gets tested at 545. Does it get taken out? That I don't know the answer to, but that is where price is headed to. On a monthly time frame, there's a Rhodes momentum indicator bottom signal. We're trading but no bullish reversal candle, and we're trading below profile support there. And profile support is at on a monthly time frame is at 625. On a 30-minute time frame, Brent, I don't have anything here either that suggests that we have a bottom. So wait for the test. It's going after that February low, that TD9 count bottom out there, and then let's take a look at what's going on in BGS. Dude wants to take an LTBR, so let's go ahead and fire those charts up here. LTBR is, I'm not sure, but not that it even matters. LTBR is Light Bridge Corporation. Light Bridge. Is that Scaramucci guy? Is that the Lightbridge Capital? Is that what that is? In any event, if we take a look at LTBR, A to B equals CD patterns. So right now, price is trading with inside its profile. And that's got support at 702 and resistance up at 803. So we're trading with inside the profile. I don't see a bottom pattern per se. I don't see an A to B equals CD. At least I don't believe I do. Let's draw in the most conservative A to B pattern. Now let's go ahead and put that over to the C point out there. And now, so we don't have any kind of A to B equals CD. All that I see out here is Basil's wave number 4, letter D out there. And then we've rallied, and just rallied inside its daily profile out there on a weekly time frame. Now the weekly time frame had a Rhodes Momentum Indicator top, as did the daily time frame. And on the weekly basis, price pulled back and found support at the bottom of its profile. That's where the buyers are at 620. And since then, we've rallied. Price should, if it can close above yesterday's high, by the way, about where we're trading right now, was 792. I would say, dude, if price closes above yesterday's high, we at least get to 928 on that weekly time frame chart. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let me just finish off Lightbridge Corporation out here. And so on the daily time frame, we just don't have any kind of bottom signal. On a weekly time frame, we do, in essence, with price getting back to support. If 620 fails, 451 would be next up out there. The weekly time frame has got it. So all of them had daily, weekly, and monthly tops out there. And it's only the weekly that's been able to test a key level of support and has held. The monthly time frame chart, as you see, got close to its oscillator and change line at 588. The actual low so far for the month has been $6.10, so relatively close. And as long as that holds, then things remain neutral on the monthly time frame chart, because price is above profile and its oscillator and change line out there. So that's what I've got for you on LTBR. Let's go see what BBAI's got for us. You had a second request. BBAI, we'll pull that chart up here. That is trading out now at $2.89. It has a wave number 7. That's the letter G bottom. Price got back inside his profile yesterday. It's trying to stay inside there. In order to do that, it needs to close above $2.93. You're at $2.90 right now. If it closes below that, then odds favor move back to test the oscillator and change line support level, currently printed at 270. On a weekly time frame, we have no bottom signal. Prices below bullish structured profile. The weekly chart suggests that price wants to pull back to $1.70. And on a monthly time frame, there's just not enough data. Price is trading with inside its profile. It does have support at 209. So it can't get to 170 until it closes below the 209 level, the bottom of its weekly, monthly profile out there. So, dude, I hope that helped you out. Jambalaya wants to take a look at Root out here, ROOT, and let's go take a look at it. Root is trading out right now at $120.74. So Root has a beautiful TD9 count bottom for its daily time frame, and then it's got a nice bullish structured profile. And we closed above the center of that bullish structured profile yesterday. We're still above it, even though we're pulling back. Odds favor that this wants to make a move up towards 139.99. Now, its resistance level before it can get there is that green oscillator and change line, Jam, and that's at the 132.31-ish level. You know that area is going to move up and down as price moves up and down. If we take a look at the weekly time frame, so we've got a bottom on the daily. The weekly, which formed a Rhodes Momentum Indicator top, basically got back and tested profile support. The bottom of the profile was at 100.91. We actually got down to 102.01. Is that close enough? That's close enough for my work out there. But in order to prove itself that the bottom is in, what price should do, it needs to do, is close above that green oscillator and change line. So this has resistance on the daily at 132.38 and 131.72 on the weekly time frame. That's your resistance zone that you're watching. No resistance that I see out here on the monthly time frame. It's got an A to B equals CD pattern. It needs a bearish reversal candle to confirm a sell the D point top. Monthly time frame looks bullish. So bullish on the monthly. Bullish on the daily time frame, and actually, somewhat bullish on the weekly. In other words, bottoms on the daily, support held on the weekly, and it's simply in a breakout mode on the monthly time frame chart. So that's what I've got for you, Jan, on Root. You also want to take a look at ticker symbol letter O for Oprah out there. And if we take a look at O formed a beautiful buy the D point bottom yesterday, much like the market. A nice wide-ranging bullish piercing candle that confirmed that by the D-point pattern. On a weekly time frame, we had price pull back and test and reject its breakout level at 52.61. But more importantly, what it did was it tested a prior swing point on a weekly basis. And that was a swing point from back on January 17th. Volume there was 24 million shares. This week, you're at 38 million shares. So you've tested and rejected that swing point with volume. What that suggests is that O ought to get back and retest at least the high of the swing. Now, I take that back. The swing point is January 17th. I suppose I said that. We're still trading inside that swing point. So I will tell you that ordinarily, Jambalaya, I would say that price is going to get back and retest that low being 51.60. The hesitation, if you caught a hesitation, is the fact that you're also trading into this weekly bullish structured buy zone at 52.32 to 53.04. So that's also acting as a strong support level out there. So on a weekly time frame, is the only area that suggests caution at this stage because of that volume metrics out there. Daily time frame, even though you've got that by the D point, in order for it to really get some action, you've got to at least get back inside this profile and above that oscillator and change line. So the daily time frame is going to need a close of about 55.45 in order to accomplish that task. On the monthly time frame, yesterday tested its swing point low from October 2023 out there, 148 million shares. It's only the 10th out here, and we've got 70 million shares. If I multiply that times 3, bad math out there, what we got 70, that'd be about 210 million shares, right? That much I got. So it looks like we could be moving to that swing point with volume. And even though we've rejected that high of 51.29, that would suggest that we back off. So if we retest that swing point once again. So that's the best that I can do for you, Jam. I do hope that helps you out, and as always, thanks much for your requests. Let's see if I can do maybe even better out here with regard to the May wheat contract. And the question from why inside the Tiger's Den is, will the weekly chart complete an A to B equals CD pattern to the downside? Now, for that, what I'm going to do is I'll switch over to the continuous contract. But what I do have up right now is that May contract, and I want to take a look at that, and I want to share with you two very important things. The first important thing is you've got that daily Rhodes Momentum Indicator bottom that was confirmed on March 31st. There was that bull sash candle that confirmed that. We're trading inside a bullish structured daily profile with price being above the center of that level and above its red oscillator and change line. Why? As long as price remembers out, I feel like I'm doing the Abbott and Costello skit out there. Was that not one of the greatest? Al was talking about maybe when I was struggling at the beginning, tell some jokes or something like that. Who doesn't love humor? I mean, you got to be able to laugh. But, was that not one of the greatest skits, the Abbott and Costello? Who's on first? Was it Who's on first? What's on second? I don't remember who's on third. I got to go back and rewatch that. But I can still picture as a young kid. Wasn't Abbott Costello was on Sunday mornings? Was it not? Was it Sunday mornings that was on dinners out there? I think it was Sunday mornings. Anyways, great humor out there. But let's get back to how did I even come up with that one? In any event, as long as price remains above 534.81, it ought to be able to make a run up to 568 out there. So that's what the daily time frame chart is telling us. The monthly, Sunday mornings. Thanks, dude. I don't know is on third. Yeah, okay, good. Yeah, and just a great skit. So what we ought to do is we'll get Al to cue that up the next time that Steve does a bumbling, segment out there. At least we'll have something, to actually kind of laugh at. In any event, on a monthly time frame out here, why you've got a TD9 count bottom pattern as well that's going to complete. So this suggests that wheat has bottom. But I'm going to answer that question for you. I'll put up the continuous contracts during the breakout here, and we'll go see what that A to B equals CD pattern on the weekly chart looks like. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the weekly chart for wheat out here. YOY inside our Tiger's Den is asking, will this complete the A to B equals CD pattern, which gets us down to about the 399 level as we take a look at the continuous contract. I don't know whether, if it's going to do that. What I can share with you is that the daily by the D point bottom on the May contract out here, and I've got the continuous up right now, or will need to fail. And so until then, I think that wheat's got a bottom in right now. So, but it's got to take out profile resistance. All right, best that I can do there. Next question coming in is, can we take a look at the Qs and find out where the 0.382 level is? So QQQ, let's go ahead and put that up on my screen. And I'll use the tool that I've got here. It's not going to be dead on balls accurate. That much I know, because I can't get this to always stick to the exact swing point high and low. But it's going to give us a pretty good range. So let's go find that Fibonacci tool that we've got inside of Fibonacci retracement tool. We'll go from the high out here. Do my best to grab that high, and then to the low, and I think we're pretty close out there. So the 0.382 level. Now, maybe what you're talking about, though, I've got to guess, Vic, that you're asking about today's move, right? Not the overall thing. In any event, yesterday's move took us up to about the 50% level. Instead, what I think you're talking about, and probably I should have read your question, but even if you didn't write that in there, I think what you're looking for is the 0.382 of yesterday's move. So now, let's go ahead and get that Fibonacci retracement tool up again out here. Let's go from the low in this case here to the high. And the 0.382 level comes in at about the 440.257. Somebody in the den can probably correct me and give me the exact number out there. But it's right around the 442 level, which is where we're so far today. In the Qs themselves, they've hit a low of 443.95. The 0.618 level is down at the 427 area out there. With regard to the Qs themselves, though, what I can share with you is there's a new profile that did go ahead and form 2 days ago. And you've got a buy zone that exists between 410.20 and 425.83. And you have resistance at the top of its profile, which is 449.27. So watch that. If we close above that today, because we could rally out here, then you have a profile change intent for the Qs. And that says that we head higher. The head higher would be up to that swing point of March 25th out there. And that range would be between 490.42 and 493.62 out there. So I hope that I got the 0.382 retracement that you were looking for you, Vic. If not, right back, and I'll make sure that we get that information. As long as we got the cues out here, you can see the weekly chart still has retained that bullish piercing status out there, and that gives you a weekly Gartley buy pattern, which I really wanted to do, which I will do. I'll at least do for subscribers out there, is go back and take a look at the S&P 500, take a look at that weekly time frame. But of course, we're going to need to wait until tomorrow, right? So I'll probably do that over the weekend. We'll need to wait until, well, I'll still probably look at it. But we with regard to where we're at today, we need to wait till tomorrow. But right now, it's still a bullish piercing candle. Someone might say, what's a bullish piercing candle? What that needs is simply, in order to retain that, it needs to be closed 50% of the way into the prior bar. So if you just take a look at that prior bar, and I would just use the body of the candle out there and figure out that 50% level, the price closes above that, you'll have a bullish piercing candle out there. Next question coming in is to take a look at SMR. It is for Rich in Oregon. And Rich is looking kind of for a short-term trade out here. Let me share with you what we see out here with regard to SMR. And that is that we've got a nice daily TD9 count bottom out here. That formed, went ahead and completed actually a couple days ago on April 8th. The bottom was on bar number 8 out there. Looks like it may have even completed an A to B equals CD pattern to the downside. But no, we don't really, two bottoms don't make it better than one bottom. Now what price is doing is price is trading. So closed above its bearish structure daily profile yesterday. And if price can remain above it, close above it, for a second consecutive session, it being 1509, we're at 1506 right now, you'll have a profile change in trend. And that would suggest that we move higher out there. Now, before we want to make and draw that final conclusion, we want to understand what's going on the weekly and the monthly time frame. So what is going on in the weekly time frame? I see a Gartley buy pattern at this moment in time. What's that look like? Here is the A to B. I'm just simply going to move this over to the C point out there. You can see that. So you can see it made maybe a 1 to 1.272-ish expansion of that C to D leg. We get the bullish engulfing candle so far this week. It's likely to hold because even if it pulls back, we can get a bullish piercing candle out there. But anything could happen. But it does look like you're going to get a Gartley buy pattern, by the D point pattern for its weekly time frame. Now, here's what we know. We know that price has got a profile that is struggling to get into. What you really want to see is you really want to see this close. This week specifically, you'd like to see this close about 1578 out there. And there's no reason for it to not be able to do that, but time will tell. And if it can close about 1578 out there, then you're back inside the profile. That suggests that we get up to the 1855 to the 1953 area out there. So you're looking for short-term trade setups. I think today you've got to watch the top of that daily profile, which again was at 1509 out there. On a monthly time frame, the TD9 count pattern took us into the buy zone a couple of days ago, and that buy zone was between 918 and 1175. So even though there's not a bottom pattern like a TD9 count, like a buy the D point, like a wave 7, anything that we have out there like that, it still can be a bottom pulling back to support, and that's in essence what it has done out there. So you got a daily bottom and a weekly bottom. We'd like to see the weekly close above 1578, so you got traction to the upside out there. That's what I would be watching. So I hope that helps you out. Let's see if there's any other questions. Thank you, Z, for posting who's on first out there. And Jambalaya did the same thing out there. I could wait. I think that show came on between 8 and 9 in the morning. I can picture myself sitting down on my, laying down in front of the TV, watching it. In any event, I think I've gotten through all of the requests out here that I see. Dude just wrote in and said, can we take a look at SMMT? So I will put that in. If I've overlooked something, please retype it in there and let me know. I'd appreciate that. But let's get the SMMT to fire up here. Let me just check my phone, make sure nothing else came in. Yeah, Nicholas just wrote in. He wants to take a look at... am I still in the camp that we're not in a bear market? Yeah, I'm still in that camp. That was from Nicholas. But let's go. We can come back to that. Let's take a look at SMMT out there. It doesn't matter right now what I think. And we've got the patterns that suggest that. But we still need some confirmation. We don't have that confirmation. But first, back to SMMT. And Rich's question was buy, sell, or hold SMR. That certainly was not a sell as far as I was concerned. You certainly would hold. The buy, you can't really buy right until at least clears that resistance level on the daily time frame. SMMT's got a, what does it have out here? It has a buy the D point bottom pattern. That buy the D point bottom pattern formed on April the 7th. And we come back to this break, we'll finish off taking a look at SMMT. Our number 8 on the weekly time frame is going to form tomorrow. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We'll take a look at SMMT. Is for do it inside the Tiger's Den. So it's got a daily TD9 count bottom It's dealing with profile resistance right now at 1997. If it can clear that, it's got resistance at 2108. You clear that 2108 level, then you're dealing with 2149. That is the weekly oscillator and change line out there. You'll get a TD9 count weekly bottom next week if price closes below 1975. So bullish on the daily. Looks like you're likely going to be bullish on the weekly. The TD9 count top on the monthly found supported its oscillator and change line. So the stock chart at this moment in time looks pretty good out there. The next request was to take a look at USAS from LB. USAS has got a nice TD9 count bottom. Price is back inside its profile. As long as it remains above 48 cents, it ought to make a move up to 56 or 57 pennies out there. So that's what I see there, LB. CKP asked about Goldilocks. If we take a look at what gold is doing, first on a monthly time frame, you're going to complete a TD9 count top. On a weekly time frame, you still have a Rhodes Momentum Indicator top. That would be negated with a close above 3201.60. On the daily time frame, we have a sell the D top. That would be negated with a close above 3201.60. 3201.60 also happens to be the top of its daily profile out there. So, Nicholas asked the question, are we still in a bear market, or am I still in the camp that we are not in a bear market? My answer to that question was yes. However, there and yesterday's action helped that out. However, what I'd like to see is a weekly Gartley buy pattern out there. And what we also want to see is we want to see that VIX index get out of contango. Until it gets out of contango, the answer is I don't know for sure. We don't have any certainty to the extent that we can have certainty out here. In the case of the New York Stock Exchange, and particularly that, by the way, the advanced decline oscillator, we are back into oversold territory. So just so you know, we are back in oversold territory, which means that advanced decline oscillator is below the minus 150 level. By the way, if we're back in a bull market, we're going to see the VIX index also trade below its 50-day exponential moving average. We don't have that just yet. So right now, we don't have a conclusive conclusion. Does that make sense? I hope so. Folks, sorry about the start of the show today. It was well intended. It just had really kind of a horrible result out there. But I want you to have a terrific Thursday, and I'll see you tomorrow. Take care, folks. Have a great day.